Ever felt tangled in the web of tax rules? You are not alone. Many small business owners I know of often step into tax pitfalls. But relax, today we are going to shed some light on the 7 common tax blunders that small business owners do and how to actually fix them. So relax and stay tuned. Hi, my name is Molen Mkuze. Welcome back to Brainmore Business Hub channel. I'm the Managing Director of Brainmore Chartered Accountants. As a person who has worked with a number of businesses, I certainly know the mistakes of small or even bigger businesses. So today, we are tackling a topic that can save you a lot of headaches and even money. So we're talking about 7 big mistakes that small business owners often make, and of course we're going to talk about how to fix them. Okay, so let's get right into it. Mistake number 1, poor record keeping. Record keeping is actually an issue. The issue number 1 is inaccurate financial statements. If you don't have accurate records, you won't be able to prepare actual financial statements. This can make it difficult to track your business financial performance and even make informed business decisions. In South Africa, the tax authorities, which is SARS, requires business to keep accurate records for a minimum of 5 years or even 7, if I'm not mistaken. If you are audited by SARS and you don't have accurate record keeping, you actually run into the risk of being fined. Issue number 2, missed tax deduction. If you don't keep accurate records, you may miss out on deduction that you can actually potentially deduct from your tax expenses. And then what happens? You actually end up paying more tax. By keeping accurate records, you can make sure that you are claiming all of the deductions that you are entitled to. Remember, these deductions could significantly reduce your tax bill. Issue number 3 is damaged reputation. If you don't keep accurate records, you could actually damage your company reputation from your suppliers, from your customers. People won't trust you if they think that you are not organized or trustworthy. In South Africa, there is a growing trend for businesses to use online platforms to review each other. If you have poor record keeping, sometimes you end up having those bad online reviews and it deters your customers from doing business with you. If your business needs capital or even funding, keeping records is a must because all funders require good records. Someone might ask, what is the medicine then for poor record keeping? Solution number 1 is all about implementing solid record keeping practices. Use accounting softwares like QuickBooks, Sage, or Xero. Someone might actually say, I don't have money for that. Talk to your accountant. Accountants normally have a wholesale pricing for those softwares, and that can actually reduce your bill. Solution number 2, hire a good accountant earlier on in your business to ensure accurate and up-to-date bookkeeping. Hiring an accountant like Brainmore is a no-brainer because you have to have experts who have to look after your books on a monthly basis so that at least you know that your things are in order. Mistake number 2 that small business owners do is mixing personal and business expenses. Mixing personal and business expenses is another common mistake that all small business normally make. It can lead to a number of problems, including problem number 1, under or overpaying of taxes. Mixing personal and business expenses can make it hard to determine the actual business expenses, leading you maybe to leave out some of the expenses that you could have deducted from your business, thereby overpaying on tax. Problem number 2 as well, I will actually call it audit problems. If you are audited by SARS and you are found to have mixed personal and business expenses, this can lead to a messy situation and potentially more SARS scrutiny for your ongoing business activities. And I can actually say this is an enabler for business shutdown. Problem number 3 is poor understanding of business performance. Truly, you cannot be able to understand how your business is performing if you don't keep or if you mix your personal and your business expenses. So how to fix it? Open 2 separate bank accounts, your business bank account as well as your personal bank account. And make sure you look after the expenses for each both. Mistake number 3 is the neglection of tax obligation. Neglecting taxes can lead to a number of consequences, e.g. penalties of late payment. Or for example, if you are neglecting your taxes, you can end up paying penalties. I call them wasteful and fruitless expenditure. Remember, even if you didn't trade, you have an obligation to do a return for your taxes. So a zero return is needed. If you don't, you are attracting late submission. Number 2, interest charge. Besides penalty, do you know that SARS actually charge interest on a day-to-day basis? If you fail to pay a debt that you have, the interest is charged on a daily basis. And number 3 as well can actually lead into bankruptcy. If you are unable to pay your estimated tax, you might be forced to declare bankruptcy. And this is a negative impact to you. So how to fix this? Stay on top of your taxes and make payments on time and have good accountants that actually help you. Mistake number 4 is ignoring important tax deductions or tax incentives. There are plenty and a lot of tax incentives, especially designated to small businesses. A small business that qualifies as a small business corporation, SBS, pays actually a tax of about 95,000. You don't pay any tax if you earn or your taxable income is less than 95,000. Remember, knowledge is power. It's very important to understand all potential small business incentives and allowances that you qualify for as a small business. There is the world of tax deduction and credits available for small business, from home tax deductions and also maybe hiring certain type of employees. So don't leave money on the table. How to fix this issue? Explore all tax deduction and do your research and consult a tax professional to identify all eligible deductions and credits. It could save you money. I can't repeat the importance of having a good accountant to help you with this. Mistake number 5 is actually relates to misclassification of workers and the labor laws around that. Issue number 1 is paying wrong amount of taxes. If you misclassify a worker as an independent contractor, you may be liable to pay less tax than you would if you classified them as an employee. This is because independent contractors are not subject to the same payroll taxes as employees. So not knowing this might actually cost you as a business. Another issue around this is non-compliance with labor laws. If you misclassify a worker as an independent contractor, you may be actually in breach of South African labor laws. This is because independent contractors, for example, are not entitled to the same benefits as employees, such as sick leave and overtime pay, something like that. So misclassification of this can lead to penalties. Make sure you understand the rules and consult a professional if need be. How to fix this? Understand the worker classification guidelines or the labor law in general. If you're unsure, consult with your accountant or your labor lawyer for your organization. Mistake number 6, not reviewing your company performance frequently. I know many small businesses do not take time to do budgets or even review the performance of their businesses. This is said as numbers talk and numbers don't lie. So if you don't review this more often, you are literally operating in darkness and might not know where you are going. And simply how to fix this? Have a good accountant who will actually force you and actually make you to understand your reports and help you know your numbers at a glance so you can make good business decisions. Mistake number 7 and the last one for today, not seeking professional help. Not seeking professional help is a common mistake that businesses make. It can lead to a number of problems, including making incorrect tax returns. If you do not have the knowledge of tax, you actually can make a return that will lead you to have to incur penalties or interest at the end. So missing out on the deduction if you don't have the expertise you can actually miss out on a number of deductions that you could have claimed. So taxes, you know that it can be complex, and trying to navigate alone can actually lead to costly mistakes. Investing in a qualified tax professional or an accountant like Brainmore, it can actually help you and save you a lot of money. And how to fix this? Like what I said, invest in professional help, enlist good accountants or good tax advisors that you can grow with in your business. There you have it, 7 big mistakes and how to fix them. Avoiding these pitfalls can actually save you money and stresses and help your business to grow. Why don't you hit that like button, subscribe to this channel, and don't forget to ring the notification button so that you don't miss out on future content that we are going to post. Thank you.